Good evening. Welcome to the Forex Pro Charts bonus analysis for October the 27th, 2010. This week we are doing a bonus video analysis of a topic that we think will be of interest and help to Forex Pro Charts traders. The topic that we're going to be discussing today is the dollar index. Now, the dollar index is a composite value of the strength of the dollar versus a number of other foreign currencies. The currencies that the dollar is being compared against in order to derive the dollar index are the euro, which comprises the bulk of that composite, the Great Britain pound, the Canadian dollar, the Swissy, the Japanese yen, and the Swedish krona. So, the chart that we have up here is the dollar index chart on the daily time period. And what we have done on the dollar index is we have gone ahead and set up zones, supply and demand zones, similar to what we do on our regular currency pairs when we're preparing to trade for the week. Now, obviously, we don't trade the dollar index in Forex Pro Charts particularly. However, the dollar index can be a useful indicator when compared against currency pairs with the dollar in them. And what we do is we find that when the dollar index is approaching a zone and reverses, then many of the dollar-based currency pairs will do the same thing. So in other words, the strength of a zone in a currency pair is increased if as long as that currency pair has the dollar in it, is increased if the dollar index is also approaching a zone. So again, to summarize, a supply or demand zone, a support or resistance zone on the dollar index chart will increase the strength of a corresponding zone on a US-based currency pair chart. And I'm going to give you just a couple of examples of this. If you'll look, you'll see here we are on the dollar index, and you can see where the dollar index came into a support zone. It spiked through a little bit on two days, but then it has gone up. But basically it has stayed at that zone and looks like it may be reversing, or at least it retraced a little bit. So let's go ahead and take a look and see what happened also on a couple of the dollar-based pairs as well on their daily charts. Now, first we'll look at the Euro USD, and we see that the Euro USD was not approaching a support zone; it was approaching a resistance zone. The zone will be different for the different pairs compared to the dollar index. Some will be support zones, some will be resistance zones, but it was approaching a resistance zone as the dollar index did, and you can see that the chart pattern that formed once the Euro USD hit the resistance zone is very, very similar to the chart pattern that we just saw on the dollar index, only obviously it is reversed because this is a resistance zone and the dollar index was a support zone. But the pattern of the zone and the retracement and so forth is very, very similar to what we saw on the dollar index. Let's take a look at another pair. Okay, here we're looking at the Swissy, and we see the same thing. The Swissy was approaching a support zone that actually was below the edge of the playing field. It spiked through the edge of the playing field, went down to this support zone, then retraced slightly, and we're waiting to see what direction price will take. The chart pattern is not quite as close to the dollar index as it was on the euro, but again, very, very similar, and the very similar timing to the movement on the dollar index. Let's take a look at another pair. Again, here we're looking at the Great Britain pound on the daily chart, and we see where price went to a resistance zone, actually spiked just a little bit through, it looks like, moved down, and again the pattern is very, very similar to the pattern that we saw on the dollar index. All of these dollar-based pairs had similar patterns at the same time and corresponded to the dollar-based index. Now, the pairs that we have looked at so far have all been currencies that are part of the dollar index composite comparison. What about a dollar-based currency that where the non-USD currency is not a part of that composite used for the dollar index? Here we are looking at the Audi USD, and again on the daily chart we see where the Audi moved up to a resistance zone, and again that very corresponding pattern, corresponding time period with the dollar index. Even though the Australian dollar is not a part of that composite because it is dollar based, we did see very similar price action. So even though the price action previous to this between these different currencies was not nearly as similar to each other as it has been the last few days, once we hit that resistance zone and or support zone, and the dollar index hit its support zone, then the currency pattern has been very, very similar for just a few days, and then price will continue to move on these different currencies. Now, we do not recommend making your trading decisions based strictly on the dollar index and what it is doing, but it is a useful piece of additional information that we can take a look at when we're trying to assess what price might be doing and whether price might be ready to make some kind of larger price movement or more long-term price reversal. Hope that that information is beneficial to you. For more information or to subscribe to our full analysis and charting services, please go to our website, www.forexprocharts.com, and we look forward to seeing you this weekend for our regular weekly video analysis. Good luck trading.